So here's how Rivian's going to make progress towards profitability. Of course, the company's been losing a lot of money on the bottom line. If you've been following Rivian stock, the stock price is down significantly off its highs. One of the main reasons is because of these losses on the bottom line. So in this video, I'm going to go through some Q&A that management held with Wall Street analysts. And of course, Wall Street analysts were asking about profitability. And so in this video, I'm going to go through how Rivian plans to make progress towards profitability, so you're not going to want to miss out if you're interested in Rivian stock. So let's get right into it. So, firstly, Rod Latch from Wolf Research is asking about the magnitude of LC and RV losses in 2023. So let me just give you a little background on these LC and RV losses. The company experienced more than 1 billion in gross profit loss in the fourth quarter of 2022. Much of that is stemming from this LC and RV loss, which stems from the fact that the company gave prices to pre those that were pre-ordering its vehicles, namely Amazon with the electric delivery vans, and it gave them a price. Let's say it charged Amazon 75,000 per van, right? I'm not saying that's the price. I'm just, hypothetically. Rivian gave that price assuming that it can build those cars at a certain cost, right? Let's say 50,000. So it sold them for 75,000 and it expected to be able to build those cars at 50,000. What turned out happening in 2022 is that the cost of goods sold was much higher than what Rivian had planned when it made those original pre-sales. So it actually ended up costing more than the per price car it sold for. So for instance, if it sold cars at 75,000, it ended up costing Rivian more than 75,000, let's say 80,000 to produce each one of those vehicles that it pre-sold. And so that led to a loss and an LC and RV loss, and with the inventory that it has, when it does sell some of that, that's going to record a loss too. So the analyst wants to know, do you have an estimate for how much that's going to be in 2023? Because it was already a big factor leading to losses on the bottom line in 2022. Management told us that it's going to persist into 2023. So here is the CFO, Claire McDonough, jumping in saying, today we sit at a $920 million charge. However, the good news is that the marginal unit that we're producing today for that electric delivery van is now profitable. Is now profitable. So up until this point, they were producing these cars at a loss, right, compared to what they were sold at, the price they were promised at. But now she's saying that they are profitable. So going forward, they're going to be profitable, but up until this point, they were not. Still, some of those losses are going to persist into 2023 because some of the units that are going to be delivered in 2023 were produced in 2022, and those were produced at a loss. The costs were so high that they are going to sell them at a loss. Okay. So, moving on to the next question from Rod Latch asking about how different the R2 cost structure will need to be compared to R1 to be competitive when that vehicle comes out. So right now, Rivian is selling the R1s. It plans on launching the R2 sometime in late 23, maybe 2024. And Rod wants to know how different the cost structure needs to be for that to be competitive when the car comes out. So the CEO Rob Scaringe jumping in saying that the part consolidation not only reduces the number of parts of the vehicle, but as a result, there's less joints, there's less things that need to be attached to one another. It simplifies the assembly process, it simplifies the sourcing process. He goes on to say, so in aggregate, we're going to see a materially lower cost structure for R2, and that's, as I said, that's foundational to how we think about that product. So, if you're thinking about Rivian and its path to profitability, this is one of the main paths to profitability. The company is planning to launch this newer model, the R2, and with learnings from what it learned from the R1, it's going to make improvements on the cost structure on the R2, and it's going to be able to produce them at a lower price and thereby generate higher profit margins. Now, I will say that this is easier said than done. Investors should not just say, okay, well, management said this, the CEO said this, that means that's what's going to happen. That's not always the case. This is what the CEO is planning. This is his best estimate. This is according to the information he has right now. This is what he's projecting. Although the future is always uncertain and there is no telling if it will turn out the way it's planned. So if you're thinking about you're thinking about investing your money, always consider that there is a chance this may not play out. Okay? Just to keep that in mind, because I don't want you all who are listening to this video, who are watching this video, to say, "Oh, the CEO said it, so it's 100% going to happen." No, that's not the case, right? The CEO is making estimates and assumptions about the future, and nobody really knows what's going to happen in the future, even if you're the CEO of a company, right? So you're making estimates, you're making assumptions, and you're giving these forecasts to those who are following the company. But those who are following also need to do their due diligence and understand that the future is uncertain and anything can happen. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Okay, and I will finish this video with this final question and answer. This one coming from John Murphy. Just the first question around what's going on with suppliers. It sounds like there's still a fair amount of bottlenecks there. Of course, one of the main themes coming out of the coronavirus pandemic was all of the supply chain challenges that came out of it, all of the supply chain shortages. And the car industry, the car manufacturing industry, was one of the strongest impacted from supply chain shortages. There's been a shortage of cars, not just electric vehicles, but even ICE engine cars. There's been a significant shortage, and that's due to supply chain shortages, right? There's parts, and Rivian will respond here. CEO saying, as we look at 2022, there's a lot of challenges with just some of the surprises and the things that we didn't expect in terms of supply interruptions and component availability. Um, However, the guidance for 2023 really reflects supply constraint, in our case around power semiconductors. So that's where there is still supply constraints. And if you think about Rivian's 2023 guidance, they said that they were planning to produce 50,000 cars for 2023. Interestingly, they have capacity to build 150,000 cars, but they're only going to do 50,000 because of these shortages of these semiconductors. So to deal with that, the changes they're implementing new technology and new ways to build a car, so they're less reliant on these one component, right? On this one component that's stalling production. So those changes of new technology, along with supplier relationship we've built, allow us to alleviate some of that constraint, but it'll be the ultimate limiting factor. And so it's going to be hard for Rivian to achieve profitability until it's producing cars near its maximum capacity. It's going to be harder for Rivian to achieve profitability until it's producing cars up to or near its capacity of whatever it might be at the time. So right now that capacity is 150,000. It needs to be close to 150,000 to be at efficient scale. It's forecasting 50,000. So there's a big gap between 50,000 and 150,000, and that's where the gap they need to close to achieve and make progress on profitability. So here's how, hopefully this video provided the insights into how Rivian is thinking about closing that gap and closing those losses on the bottom line. Remains to be seen if they're going to be able to execute on this strategy, but this is a strategy as laid out by the CEO and CFO, so you've gotten it direct from the source, right? This was on February 28, 2023, so very recent, direct from the source, and so you can make up your mind as to what that means and how you feel, how confident you feel that they're going to be able to execute on this strategy. All right, so as always, thank you for watching. I truly appreciate your viewership. If you like this video, I'm gonna add some videos at the end of this one that I think you will enjoy. So please click on one of those and I'll see you over there.